think, act, and prosper. You are now tuned into the Money Level Show.
Hey, Alan, glad to have you back on the show today. How you doing?
Hi, Darren. Happy to be back on your show. I'm doing fine. Thanks.
That's good. That's good. What's been happening in your world? We're in a new year. What's your outlook on the year?
Yes, my outlook, I would say, hasn't changed that dramatically because I'm not trying to mess around a lot with the macro stuff. Of course, I have to monitor it and to see if it influences dramatically my investment decisions. But basically, I'm trying to figure out or to find ideas that are not that much correlated to the broader markets and that are not affected by what the Fed, for example, announces. I'm talking about heavily indebted companies that, of course, are begging and praying for raises to be lowered as soon as possible. And if you stay away from such companies, it's of course much easier, and you can rather lean back. And it doesn't matter whether they lower in March and summer at the end of the year or whether they keep the rates steady, just to name an example.
Yeah. That's true. That's good that you're, actively looking for those types of companies that aren't as affected by the macro environment. I know last time we did discuss a few companies that are affected by geopolitics. I mean, we talked about Petrobras and some of the energy companies, and currently we have the issues in the Middle East area heating
Mhm.
up, and so um, I'm kind of wondering what happens out of that. Like if we're gonna have an oil price spike or anything like that, is that something that you're keeping an eye on in terms of for oil?
Not only oil, but we can start with everyday life in general, because due to these strikes and issues, we every time we shall expect price increases because trade routes are prolonged and freight rates are higher, and sooner or later this will translate into higher transportation and everyday expenses that will go up higher. I think this rather underestimated as of now. Of course, we hear it in the news and we can read it on the internet or in newspapers, but the average person does not seem to care that much. This is my impression, I would say. But I'm sure that because energy is one of the first positions in the value chain, it influences all other materials and products cost-wise. And that's why I would say energy um, must be closely monitored. And if you want to hedge yourself, not only your portfolio, but also your expenses you have in your everyday life, it is for me riskier not to be invested in oil and energy in general, but especially oil, than to be sitting on the sideline and being rather afraid of a weakening economy and oil going down, because I think the probability is rather higher, or the risk is higher tilted to the upside than that we'd see another crash of oil like we saw in 2020. I do not expect it as of now.
Yeah, that was pretty profound what you just said, and so I want to chime in on one thing that you said. I want to focus in on. You said that it's risky not to be in energy. So could you elaborate a little more on that?
Yes, looking from an investment perspective, of course, everyone knows what real losses are, but there are also gains you have not made, or on the other side, when energy prices shall or should they go through the roof. Some people are calling it a potential second inflationary wave. Of course, this would be a shock to the broader economy and to the broader stock markets. As we have seen, when inflation rates across a certain threshold cannot say whether it's 3, 4, 5%. That does not matter at the end of the day. But when inflation gets dramatically higher, this is somewhat shocking for the general economy, and the readjustment process first sets in, and it takes some time for the whole value chain to adapt and to find new price levels. And this is all linked to uncertainty. And as we know, the markets and market participants don't like uncertainty. And the first thing that happens is the sell button gets pushed. That's why I would rather include or put some energy exposure into my portfolio to be not caught on the wrong foot in this regard.
Hmm. Yeah, and an interesting dynamic that I hear mentioned amongst investors every now and then is that Warren Buffett is still buying Occidental, still
Mhm.
bullish on oil. And so I'm thinking just like, okay, yeah, one of the best investors that is throwing a lot of capital into oil companies. Like there has to be something there. And so what's your take on that?
Sure, he may have his own reasons, and interestingly, I wrote a separate article about it. It's not always wise to copy him and to look for his concrete investments, because there's also a time lag often in between certain announcements and his actions. But I think at the very minimum, he does not expect falling oil prices. Otherwise, he would not jump in. Or we can also include gas in this case, because the big energy companies often do both, oil and gas. And I think the flaw is or the downside shall be rather limited. What I've observed over the years is that many people think then that when economic activity weakens, that energy prices always must follow and crash, but this is not necessarily the case. It all depends rather more on the supply and demand dynamics, and it has an own cycle. It can correlate to the general business cycle, but it does not have to. No? You know, when supply is way too short compared to demand, even if demand falls and the general economy falls, then the price of energy rather will go up. And we have seen periods like the 1970s where oil prices went through the roof. Of course, there were some different reasons to it, but it was uh, when you don't have enough supply, um, then it looks difficult if you're not invested.
Hmm. Yeah, and we've been getting some contrary information from the IEA, I believe it's the
Mhm.
International Energy Association,
Yes.
and it came out and said that the U.S. is producing much more than expected, and there's like things are good. But when I listen to professionals on the ground who study oil wells, they study the difference in between
Mhm.
like the oil that's coming out versus like the gas and how much gas there is, and I'm
Mhm.
not even gonna act like I'm an expert in understanding it, but I do like to listen to the experts on the ground. It's kind of interesting how you have this huge agency that's giving this information, but then there's a discrepancy between what they're saying and the people that are actually on the ground in the fields, working the rigs, working the wells.
Yeah, some pieces are not fitting together. Something strange, and I've even read, but I have not double checked it. But it seems that a definition of what oil actually is has changed. Can you confirm that? Have you heard of it?
I wouldn't be surprised, but I mean, a lot of definitions have changed. The definition of recession has changed, and so
Ah,
I
yeah,
can
true.
imagine that that's probably what happened. So yeah, so with oil, obviously energy being pretty much in position to move one way or the other, but likely higher. You said that other aspects of the economy is going to be impacted. I mean, you have shipping routes and things of that nature. I know there's tanker companies that you can invest in and such, and so I'm invested in a couple, but I haven't done a whole lot of research there. I've done some in terms of like how long it takes to build the ships and when
Mhm.
they have to get recycled and all those different things. Have you looked into that specific sector with the tankers?
I've done some research. I'm not finished yet. That's why I haven't written any report or weekly about it. But what I've read so far is the shipyards are also stuffed fully with LNG tankers so far. So, and basically the situation is everyone thinks when hearing of ships 2007, 8, 9, we had a heavy oversupply and the whole industry crashed and many companies died because everyone was too euphoric at the peak. And in the years after the peak happened economically, the ships were delivered because they were already in the making, and this put additional pressure on the whole industry, and the majority lost faith as to shipbuilding. But now we have exactly the opposite situation. All this war stuff and the dangers come on top of it. But looking structurally into this industry, the case is that because many companies, at least those that survived, are a bit afraid to order more ships and new ships, and they are rather waiting and hoping that the price levels for the charter rates stay at or reach better price levels for them, to not be surprised negatively. And there, I don't know whether it was Frontline or whether it was DHT, but one of these two companies showed a chart from 2005 until including a projection for the next years, that first we had many ships coming to market, even when demand was not there anymore. And now for the next years, demand is expected to increase. Don't know whether slightly or higher, but we can say for sure that oil output is at a record high compared to what happened in the years before and the decades before, because demand worldwide has surged. This is a given. And tankers have a shelf life of average 20 years, some 15 years, some slightly more than 20 years, but let's say 20 years if nothing happens and if no pirates enter it on the way. And yeah, the problem is too little ships are coming. I have heard about of 6 or 7 new ships coming over the next 3 years. I think it was in total for the whole industry, not for one company, for the whole industry. This is yes, a bottleneck, and it's year by year getting bigger and tougher. And assuming the numbers from the US are right, that oil production has increased dramatically, this is of course a huge tailwind for the industry of tankers, because they have more to ship, and if they are forced to take longer travel routes, even more so. However, I have some slightly not okay with the evaluations. I haven't figured that finally out yet, so that I can not say I'm highly convinced it's a no-brainer buy. Like, for example, we had in our last discussion about uranium or about met coal. But it's of course a very interesting setup to watch. And the numbers shall come out. I'm not sure whether next or the week thereafter, but it will be very interesting to see what these companies are going to report and to what outlooks they will give. On the other hand, we have also container shipping. I was asked in a different interview about container ships, and there, for example, we have structural headwinds, not tailwinds. No? Charter rates also went up, but the economy was slowing down, and in their case, less goods have to be shipped now. So I prefer to take these situations and industries where from the structural side you have tailwinds and and the special situation that comes on top. At least I do it this way. I see it as a bonus, but not as the main driver or thesis.
Hmm. Yeah, definitely. And so when you're looking at the tanker sector, when you're wanting to do some valuations, are you doing net asset valuations, looking at the assets and such? What's kind of your process with when you're looking at those companies?
Yes, exactly that. I try to estimate a net asset value. There are two ways to do that, or three ways basically. First, listen to management. If they give some guidance, okay, we can do it. But as a second step, I'm looking at the price to book value. Usually, I'm not doing it because it is a rather outdated figure. But in the case where you have lots of hard assets, you can still do it. And as a third one, I'm looking at assets and subtracting the debt of these companies, but this rather tends to correlate also with the price to book value. It's not exactly the same result it comes out, but to 90% more or less, and not counting in future growth or higher tanker rates. At the moment, I came to the conclusion that the price to book ratio is more around 2x, and this is already a slight premium. That means that some growth is already baked in and expected. That's why I'm hesitating a bit to strike on this point. But for monitoring purposes, absolutely no problem.
Hmm. Okay, gotcha. And while we're still on energy, the last time we talked about uranium, we've had a lot of these stocks. They've went up significantly since the last time we spoke. Are you still bullish on uranium? Uh, where are you at in terms of uranium? I know that you hold the yellow cake, the
That's correct.
physical trust, and so where are you at with uranium?
The thesis has not changed. Our last discussion was in somewhere in November. It feels like during these 2 or 2.5 months, uranium jumped the same amount like it jumped in the years prior. We had a drastic acceleration in pace. We crossed the $100 mark. I thought that initially that this would trigger some more bullish responses and euphoria, but this still does not seem to have happened. The mood or sentiment is rather still subdued, I would say. But interestingly, at the end of last week, Kazatomprom, the biggest uranium producer, the big fish, the Saudi Aramco of the uranium industry, if you want to compare it, confirmed what some experts already said would happen, that they will not be able to reach their production targets for the running year 24, and they will have to check their outlook for 25. They will update on it with their half-year results. But this is in so far interesting or confirming the whole thesis. When you have the biggest fish not being able to increase supply, and you are already in a market where you have a supply and demand imbalance by about a third, or it's 60 million pounds it was, and even counting all these new mines that slowly start to come online, again, that were shut priorly, this gap cannot be closed. So it does not really matter whether you have a huge gap or a huge gap that has been slightly closed. The gap is still there, and at some point, the utilities likely will be forced to take action because they have spent already large amounts for constructing, and many of them have even several decades of operations behind them. And the last thing that these utilities want to do is to not get any supply themselves to replenish stocks, so that it's rather a musical chairs game for them. And I'm even more relaxed despite higher prices of uranium than I was, let's say, a quarter or two ago, because there's still no solution at the horizon. The only thing that would be really disruptive, or two things that would be disruptive, are suddenly appearing huge supply. No one is seeing this one coming. All the experts are saying the big project from Canada, if they are lucky, it will come towards the end of this decade. And even this alone will not be enough to close the gap. And all this is without factoring the increasing demand. It's all everything is based on the current demand expectations with the existing reactor fleet. And the other thing would be maybe a nuclear accident. Of course, we cannot influence it. We cannot see whether something like this happens or not. But taking the situation as is, this is one of the most convincing, and I do not want to call it sure things, because nothing is sure in life, and especially not in investing. But it's very, very favorable, and I'm very relaxed, and this is a core holding for me, absolutely.
Yeah. Like the probability is still there. So looking out to Fed pivot, the Fed's planning a pivot. How are you seeing this this dynamic impact in the markets?
I would say that many participants, investors, and companies alike are expecting rates to start to be lowered soon. The first expectations were more towards March. I'm not so sure whether this will happen, because the published jobs numbers and the inflation also has not come close to the target of the Fed. But looking from looking how I am look, or how shall I say, look it from a perspective of an investor who is not dependent on the level of interest rates too much. I don't need to care what happens, when it will happen. This is a question of fine-tuning. As long as I am convinced that the picks that I make and the ideas that I'm publishing are not too dependent on the cost of debt, because they have clean balance sheets, or maybe they are even benefiting from high interest rates, because when you have a net cash position, you can put that money to work and generate some extra income. And that's even favorable in this case. Or looking at turnaround situations that also have rather clean finances and do not depend on what the Fed thinks or says. Of course, I'm hearing what the results are, and that Fed, or here in Europe, ECB meetings generate this or that outcome. But in the end, I do not care that much what exactly happens and when it happens, because I'm more focusing on being independent of those decisions.
independent of the Fed. That's good. So,
as much as possible.
yeah, definitely. So, give us what was your uh, top performing stock pick last year, and what do you feel is going to be your top performing this year? Obviously, we don't know the future or whatnot,
Mhm,
but um, what was which stock that you've sent to your subscriber list was the
mhm.
outperformer, and then what are you anticipating for this year?
It's not that big of a surprise that by far the best outperformer was Yellowcake, my uranium pick. Initially, I thought that maybe it will lag the uranium producers a bit because of its defensive nature. It has no mining operations and it's only a tracker of the price of uranium and does not have the operating leverage with higher uranium prices, but it even beat Kazatomprom. What this was somewhat surprising for me. Chemical, not that much, but this is not my benchmark. It made Yellowcake made around 100, 105% last year. This is fine in British pounds. And honestly, I think that it could again this year be the top performer, not because I do not want to give you a second name. We can talk about a few names more, but the uranium setup is so strong and so convincing that um, I have difficulties in finding arguments why it should not go up that much. The retail crowd has not rushed in, and the big pockets haven't rushed in into this rather special market yet, at least yet. It can change, of course, but as long as the companies are rather reporting weak results, not from the profit and loss perspective, but from the mining perspective. I'm still very bullish on this one. And to give you a second name, Arch Resources from the met coal sector. We can also talk about Alpha Metallurgical. It's basically similar, but slightly bigger than Arch. Arch has shifted in its capital allocation program a bit towards the end of last year. It had distributed 50% of its free cash flow as a dividend, and the rest was used first to clean up the balance sheet. This is done already. And the rest left over was used to repurchase shares. But the last point was rather it was okay compared to traditional companies that are announcing big buyback programs in absolute numbers, but relatively and looking what it does percentage-wise to the share count, it was not spectacular. But in the case of Arch, they repurchased or they had a pace of repurchasing about 3% of their stock, but not during the whole year in a single quarter, indeed. And because they shifted now towards 75% of their cash flows going towards cash flows, I think that this will propel the stock higher, given that coal prices do not tank, but the economies so far are, despite weakening somewhat, they are still holding up rather well. We are far from having a tough economic situation. And as long as this persists, and with coal, we have also some supply issues because this is seen as the dirtiest of the dirty sub sectors. And this, yes, and so the companies are not investing pretty much, only what is necessary. So that we have also here some rather limited downside, but interesting upside.
Hmm.
So
Yeah.
these would be the two names, assuming that no oil price accident to the upside happens. But because then I would rather be bullish towards oil, but this is not something I can control. That's why this is rather as a seen as a hedge or from the idea from the second row.
Yeah, definitely. And it's important to note, like, obviously, we're talking about commodities now, but commodities
Mhm.
aren't your only focus with your newsletter. Like you look at companies all
Mhm.
across the spectrum. I mean, we even spoke about Zoom, before. And so yeah, so companies even in that sector can pique your interest. So could you share a little more about your newsletter as we wrap up?
Yeah, pretty much. Sure. Thanks for asking. Since August 22, I am operating the blog financialengineering.net. My focus lies on stock market investing and on stock ideas. Sometimes I'm also writing about investment mindset or portfolio strategies, but basically 80% of my posts deal with certain ideas, and I distinguish myself from other such services with or by trying to figure out interesting but not that much covered ideas, but all of them have to be financially sound, because in the past I burned my fingers myself with by ignoring balance sheets and so forth. Yes, and currently, as it is, most of my ideas are related to commodities because I found several interesting setups. But I'm also writing about special situations, about takeover targets that are not correlated to broader markets. Um, Here or there, I'm finding high yield dividend positions with safe payouts and interesting capital distribution setups, and also a few turnarounds.
Hmm. That's great to hear. I'll be sure to link to that in the description below. So be
Thanks.
sure to go check out Alan's website and his services. He does, I mean, you simplify it for many people. Like you go through, you do the in-depth research. I mean, you filter through all of the pages, all of the jargon, all of that, and then you simplify it and condense it for average investors to be able to get the meat and potatoes of a company. So thank you for doing that.
The best I can. Yes, the best I can.
Yeah, yeah, for sure. All right, take care. Talk to you soon.
Take care. Bye, Daryl.